I think we're live. What's up? Hope you guys are doing well. Today is March 4th, 2024. And are we back yet? Are we back? I think we're back. Bitcoin is doing this thing. It's been a heck of a last, I would say, 60 days for Bitcoin especially. But it's just been a joy to kind of be here with you guys as I kind of narrate this whole process, kind of talking about what are we seeing? How do we even understand this as investors? How have we been able to take advantage of many things going on? And, today may be a special day, y'all. So Bitcoin currently, as I'm looking at it, it's at 68,279 bucks. Now, it depends on where you look, whether you're looking at certain exchanges or, coin ranking sites, but typically they say somewhere around that 69,000 and a couple $100 range is the all-time high. So what does that mean? That means we are literally less than like 2% away, less than 2% away of making an all-time high. And we all know that that happens in crypto all of in a snap of a finger. So today's a good day, y'all. I think a lot of us are excited, but the thing that we have to realize is we're kind of just beginning. Like there's a lot of things that are still yet to develop within this market in this bull run. And so the more that we kind of just we understand the dance of crypto, I think I'm gonna talk in terms that may be a little bit more understandable. Instead of all the technical stuff, let's act as if this is a dance, right? Crypto is doing the two-step or doing whatever the case is, whatever dance you like. And you got to understand that there's different movements for every part of the dance, right? And so we see that we're in crypto summer. We're finding out that, when people really have demand and capital markets really get that liquidity from all different type of places. And as we can see, the Bitcoin ETFs are really one of the main sources of liquidity for this run that we're currently seeing. We're going to find that there's different behaviors with different cohorts. I'm always talking about the long-term holders and the short-term holders. Now, one thing that a lot of us worry about is just the coins that we have. So we're talking about, okay, we got our Phantom, our Solana, our Illuvium, our IMX, our Pulse, our PHEX, all that good stuff, our Ethereum, our Bitcoin, whatever the case may be. But one topic that a lot of people don't understand is in terms of like how relevant and important it is the flow of stablecoins. Now, the reason why I want to talk about stablecoins now and not like a year from now is because you got to understand the underpinnings and kind of what allows these things to have the type of flourishing moves that they do have, especially within DeFi or anything that is just specifically not on a chain per se, like not on an exchange where they can just buy it and swap it on whatever the case may be. So we really need to understand why stablecoins are important. Like we really do. And today I'm going to make the case for all you guys that are watching today of saying, okay, if it's going to be something that I'm looking into doing over the next, I would say, over the next like 6 months, if you're going to say you're going to be doing some type of research within crypto, this is a point that you don't want to skip over. So let's talk about it. We got a lot of people in here. I appreciate y'all for coming through. Smash that like button. We already know that this market is the market to be in. I understand people like stocks. People love real estate. But the stats don't lie. The data doesn't lie. And we find ourselves in the best asset class known to man as of today, So let's go ahead and see what we can see as we jump into this chart really quick. So Bitcoin, as we all know, doing this thing. A lot of the time when we find Bitcoin just kind of, really showing people what it's really about, right? People have for a long time talked about this being a store of value, That is the main case since I would say really like that 2017, 2018 cycle where it's like, okay, after that, people start to say, okay, you know what? This thing didn't die down here in 2019 and Bitcoin seems to be something of intrinsic value. So not just an aspect of saying, okay, I have something that is digital and, it seems like some people like it, but it's simply like people got to understand that at the end of the day, Bitcoin is one of the largest computer networks in the entire world. People don't understand like that's actually something you can touch. Like that is something that has use case. First of all, people ask about like, oh, it's not backed by anything. I sent out a video in the Vaults of Crypto earlier today, and it was talking about specifically how the fiat system that we've gotten all tricked into using it's not backed by anything except for government promises, really, truthfully. And so, you want to look for something that is intrinsic. It's not always physical. Intrinsic value means, hey, there is something behind this that you can point to, essentially, that has an underpinning or a working function. So DEXs, they have a working function, therefore intrinsic value. Bitcoin, one of the largest computer networks, and very decentralized at that point. That's intrinsic value, y'all. And so, with something that has a very minimal supply, and as we can see here in about a few, it seems like it's dating a few weeks. It seems like, in about like a month and some change, we're going to experience that supply shrinking on an inflation basis. And so these types of dynamics are simply built into code that allow this thing to continue to have these large price spikes during the halving year. And we're going to talk about the halving year in particular. So this might be a watch party. We'll see if we actually get there. I mean, if we want to zoom in really tight, and this is the Bitstamp chart. So the data here is pretty accurate. Bitcoin has already made new highs in other countries, but here's the key. Over the next 5 days, the thing is this, this is definitely going to happen. We have 5 days until the end of this candle here for this weekly chart. We definitely will probably, I would say, there's a good chance we'll go ahead and have a close above where we have had closes in previous times. So like over here. So one thing that we can easily look at is just saying, hey, there's momentum here. Now, when this momentum stops, it's very hard to call, man. Like these ETFs are really, really having a lot of inflows. But nonetheless, we have a full retracement. I repeat, a full retracement of the bear market. It's like the bear market didn't exist, and we're back, truthfully. So with that being said, let's dive into a little bit more conversation on why stablecoins are important, why you need to track the inflation of stablecoins, basically when they're being minted, and what does this do to the market? Like the easiest way to talk about stablecoins give you like the backstage pass to liquidity. And the most important thing is like when we're thinking about liquidity in general, money always has to find a home. Now, the rails in which money gets to certain places is very important to pay attention to. So that's what we're talking about. Stablecoins are those rails. We need to look at circulating supply. Circulating supply is going to be your best friend if you learn to track it for the top stablecoins. And so we're going to talk about that in detail here in a bit. But Bitcoin doing this thing. Now, here's the thing. Now, check out Ethereum, you guys. Ethereum is sneakily, like very sneakily, just coming right back. Like a lot of this stuff with Bitcoin dominance saying, okay, Bitcoin dominance being at 54%. I get it. But here's the thing. The dominance for Bitcoin may still be doing what it's doing, but in terms of Ethereum, I still think Ethereum's better technology. It quite frankly is. The implementation of smart contracts is a thing, and zero knowledge proofs are really they're here and improving as time goes on. And so now the thing is, Ethereum has had an incredible month. Like the last, in general, if we look at the last really 5 weeks for Ethereum, it has basically dang near recovered versus lagging behind Bitcoin so much. It's almost there. It's just about, I'm saying like 2 or 3 weeks behind Bitcoin in terms of price appreciation. And so this is what altcoins like to do. They like to lag behind Bitcoin. Ethereum's going to be the first one to start to, at some point, surpass Bitcoin. I had a lot of alpha for the group talking about like, okay, how do we really understand when the thick of it, I like to call it, when the thick of altcoin season is here, like those last like really, really important 5 to 6 months of alt season, how to know when that happens, But the biggest thing is like talking about, okay, when Ethereum really starts to catch pace, this is going to allow a lot of things to happen due to the liquidity bonding within the rest of the coins in DeFi, especially on the Ethereum chain for sure. But, Ethereum has broken through that golden ratio. And so it's looking to attack this next level just right below $4,000, $3,900. So, positive development for Ethereum amongst a lot of these other coins. Now, here's the thing. Knowing and doing your research is very important because similar in like kind during this time of the bull, right? Things like Shiba Inu was going crazy. And then here's the thing. Once again, the memes are going crazy. I mentioned quite a few here on the channel recently, and man, all I can say is, look, retail ain't fully here yet. I would say, like, if we're looking at percentage, maybe like 12 to 15% of retail is actually really here. So, but check this out, y'all. This is ridiculous. This, like, only stuff like this happens for memes, first of all. Especially this early in the cycle. But look at these last 2 weeks. These Chad candles you only really get from memes, man. And it's simply just because people, they really dig this stuff, man. So crypto was not just about the analytics and the statistics. And a lot of crypto is just like, hey, I believe that this thing could do well in price appreciation. A lot of it is speculation. And so if you know how to play the speculation well as an investor, right? Like, this is ridiculous. 380%, and we're talking in 2 weeks. So yeah, this stuff is not going to stop. And this ain't even the full chart for SHIB, obviously. So, a lot of things going, man. It's pretty impressive. And I really think that, we are in a really good prime spot as investors to say, okay, cool. If you packed your bags, great. You may want to start rounding them off because, as I've been saying for really like the past like 3 months now, especially, it's just like, why are you waiting? If you're waiting to DCA for that perfect point, you would have been wrong the past 3 or 4 months by doing so. So definitely try to embrace how this is going to go. Understand the mechanics under which why they do what they do as far as these capital markets, especially Bitcoin, and then see what's going to make sense for your portfolio. Okay. So yeah, things are ripping and running, but let's do this, right? So let's talk about, let's go to CoinGecko really quick. So CoinGecko, let's talk a little bit about stablecoins. So stablecoins, they're not anything new. They really became, I would say, relevant or came to prominence more so in that 2019 to 2020 range, okay? So stablecoins really introduced a lot of availability of excess capital outside of Bitcoin. And this is why a lot of coins were able to do what they're able to do, why projects were able to get funded, why a lot of, I'm talking about price finality or just, transaction finality. A lot of that is due to just the stablecoin system, right? So what we have here is the main stablecoin that I'm going to talk about. So Tether is pegged to the dollar. Now, Tether, a lot of people want to talk about, okay, well, hey, can we trust Tether? My thing is this. We need to understand that outside of people's opinions, what have been the facts of the matter? What has Tether done? How have they been a big benefit, whether it's to you personally or to crypto in general? And what does their lifeline or their runway look like over like the next decade? And one thing that I'll say is it hasn't been many situations where it has been unpegged, and it may have been unpegged for maybe like 1% for, I don't know, maybe 2 or 3 times in its lifeline. But with that being said, if you're worried about unpegging, you need to understand, okay, well, if something has underlying assets, and the cool thing about it is, especially when we get to USDC, we kind of talk about, how does this even work? How are they even minted? All of this stuff, right? We start to understand that, you'll be surprised at what these things are backed by, right? So fiat backed by what? Like, if you want to say, okay, what is pegged to? A lot of these stablecoins are actually backed by government bonds. And so we'll dive into that here in a bit. But here's a key thing. What do we have here? So when you look at market cap, this is an actual true market cap because it is an equal value of $1. But when you see it, this is what it really is. Like, there's actually $100 billion sitting in the vault of Tether. And since that's the case, now you have to be able to call it and say, okay, cool. Well, if there's $100 billion sitting in this bank or cash equivalents, whatever it may be, cool, we can basically make $100 billion of, or 100 billion tokens of Tether, So now let's kind of see, okay, well, what does that mean to us, right? Like, okay, cool, more Tether coming into circulation. What does that mean? Well, that means that extra money that now comes into crypto has to go somewhere. Like, think about it. It's either going to get staked for the yield. And then, so for that being said, it may go to certain protocols like Aave or MakerDAO. Like for DAI, understand, like, what is Richard Hart doing? He took $200 billion of DAI and said, oh, all right, cool. Let me go ahead and get my 5-6% on this. All right, cool. But here's the thing. So let's talk about this really quickly. Tether, 1-to-1 backed by, yeah, it's backed by fiat currency, is what it is. But the thing is, what does it do? It brings liquidity to crypto and immense liquidity. And I'm going to start to show you guys some charts that's going to blow your mind of like, oh my goodness gracious. Like a lot of this stuff is solely because they are printing more stablecoins. A lot of these price pumps, availability for prices to even go up simply just because there's more stablecoins in the system to be used. And so the more stablecoins in crypto is like the best gift that we could ever get as an investor. Because if we're already in these markets, what does that mean? It means, okay, there's new fresh capital coming into the markets. And this is what you're looking for. So with that being said, what can we see? We can currently see that, like, yeah, there is plenty of, US dollars, and in terms of, okay, cool, $100 billion of Tether can be printed. Beautiful thing. Now, the interesting thing is, and I think, I don't know how much this is for real. Like, I believe it because simply they have to do this legally, but just in sense, like a lot of the Tether is on the Tron network with Justin Sun. I mean, I wouldn't trust that guy with a 100-foot pole simply, or anything that he's been a part of. But outside of that, like, let's take a look. There is $46 billion. And think about it, $46 billion on Ethereum. Now, let's talk really quickly. We need to understand that what has recently happened with, and actually, let me actually go back to the main screen here. So we need to understand this. So we're talking about $46 billion that's currently within the Ethereum ecosystem of Tether. We'll talk about USDC here in a bit. In the last 55 to 60 days, more than $10 billion of Bitcoin has been bought by these TradFi guys. A lot of people just don't understand how much money is really, really out there. There's hundreds of trillions of dollars that is nowhere near crypto. Understanding that one of the first ways that it is going to enter crypto is into Bitcoin first, but secondly is through these stable coins. And then so right now, like mark my words, like we may look at this a year from now and we're like, okay, cool, $46 billion that has been authorized to be used on the Ethereum chain in regards to Tether. Do not be surprised in the next year and a half or even whatever next cycle, we're starting to see 3 digits, right? So $100 billion only in just Ethereum, or even $200 billion. And as the time goes on, as the beautiful part of all this, if you understand the financial system, all these fiat currencies, guess what? They're going to just keep making more. So what does that mean? That means more of that is going to be minted in terms of Tether as people get exposure into crypto. And the thing is, Bitcoin is just the first stop for these ETFs, you guys. Like it really is. Like only like 10 or 15% of actual like capital managers, hedge funds, etc., there's only a subset of them that have actually participated. Those rails are opening up 6 months from now, a year from now, so forth and so on in the next cycle. So y'all got to understand that, like, when it comes to this cycle in particular, there's some compelling things to actually tell us that, like, yo, there's actually some real money that can finally have the chance to enter, and legally under the regulations that they were looking for, right? They were maybe strapped simply because a lot of them, they couldn't sell this stuff to their clients and these products in ETF form or whatever we may have in the future, simply just because of the regulation. And so governments have finally given us a little bit of a pass. Thank you to BlackRock. And so this is just the beginning, y'all. This stuff is about to get really exciting. But yeah, $46 billion in Tether specifically for the Ethereum chain. Don't be surprised if we hit 100 here in about a year or so. So I did want to say that. Let's jump back into what we're looking at here. But here's another thing. We can also see how much Tether is on some of these other prominent chains. So the next chain that, and this is why I keep telling people, is like, all right, yeah, I know Solana has its network issues, but who has chosen Solana? Stablecoins have chosen Solana, mainly Tether, right? So yes, this is a fraction just right below 2 billion with Solana, but here's the thing, the more use that Solana chain is going to get in terms of transactions, it's just going to, beg for more stablecoins, And so AVAX is after that, Omni, Cosmos, and Tezos, right? So with that being said, there's plenty of, stablecoins that are in use. But here's the thing, there's more, right? And how do we know that? Because simply just in the past, like if we were to go to Twitter and look at a couple of things, just in like the past 2 days, there's like another 2 billion. Like I remember looking at this like 2 days ago, and it was at like 98 billion. And just in like that, just $2 billion in crypto via stablecoins in a day. So that's going to continue to ramp up, especially as these countries continue to devaluate their currency. And I think that a lot of people don't understand why that is. Like, I know I'm going on my soapbox here, but like understand why they will continue to do that. Why will these currencies continue to devaluate? Simply because when you devaluate your currency as a country or a nation, what does that do? It allows you to make products cheaper and more efficiently. If you can make products cheaper, that makes you a more desirable trade partner. You want to be a desirable trade partner, especially with the United States. Like people got to understand, it seems like seemingly everything that we get is going to either be from China or, you know, some of these other nations here in the United States. So the key is this: as these United States continue to hold the in terms of like the what am I thinking about? Oh, so as the United States continues to have the reserve currency, we've got to see and understand that, you know, this stuff is going to continue to be a house of cards, right? And in order to kick the can down the road, the only choice is to make more money to handle those interest payments. That's just it, you guys. And the more money that's created, the more money that's going to eventually find itself in the stable coins, and thus how we get these crazy pumps. Like this is just the name of the game. So now that we know the game, let's talk about a little bit more information. So the other stable coin that you need to be aware of and the movement of it is going to be, as we all probably have heard, Circle. So Circle is the issuer of USDC. And the key is this, right? When we're looking at USDC, understand where they at in comparison to USDT. So let's talk about it. So if we want to look, and here's the thing about this, they are audited, you know, very frequently. I want to say monthly, right? And here's the best part about it is like, okay, you want to double check and you want to feel comfortable in a stable coin. Well, let's see, okay, well, what actually backs this stable coin? Like if you're just like, I don't know if I can sit in USDC for too long or blah, 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 XYZ. Okay, well, let's kind of dig a little bit deeper. So Deloitte, do a little bit of research on Deloitte and how they have been an auditor for, I'm talking about companies like Apple, Microsoft, NVIDIA. These guys have been doing this for a long time, auditing, just making sure that there are no inherent risks in terms of the profile under which these things are backed. And then so if you scroll through, this is very recent. This is as of a few days ago. So as of right now, and the crazy thing is since January 31st of 2024, we're up like another $2 billion on USDC. So as of right now, we're sitting just give or take, I want to say it's about like $28 billion for USDC. So a third of what Tether is, give or take. Now, as we kind of scroll through, we get to kind of see how is this stuff back, like what is actually held in terms of when they are going to be minting USDC, what is the underlying asset? Typically, it is going to be cash, but also cash equivalents, aka treasury securities, okay? And then so we have different maturity dates throughout the year. Nonetheless, you see hundreds of millions of, if not billions of dollars in certain treasury holdings through time in the reserve fund. So this is what you need to see. You need to come look, do this research. Okay, cool. Let me actually see, you know, under which, how they're actually getting access. So in terms of like, okay, like what are they doing? They're actually buying these bonds and saying, okay, cool. You can have these bonds, but go ahead and give me my USDC. And, you know, and this is a beautiful thing. And so we have this information. Now let's talk a little bit. Now, how does this affect price, y'all? So let's go over to Glassnode really quick. And what we can see up for Glassnode is some compelling information, right? As I talked about early on for Tether especially, if we want to look at some of this information, what do we see? We see a little bit more volatility, right? But in terms of like saying, hey, it goes from being worth $1 to $1.02. Or at worst, we've seen it unpeg just about to about like 98 cents. So 2%, I would say, market depth in terms of what's going on with the stablecoin. That's really not that much truly. There's going to be art bots that take care of, you know, trying to grab that spread. But anyways, that's a different conversation. But through time, what is actually happening? You see this thing stabling out. for stablecoin, it's stabling out as far as volatility. So that means, better predictability through time. So here's the cool thing about this, y'all. What do we find is we find that we have these impulses, and really understanding these timelines are key. If you understand what happened during this time here, March of 2020, you have COVID, and months after, you see, and we're looking very detailed here. We're looking at April of 2020. We see just about, not that much, $6 trillion of USDT that was minted currently. But what do you find is as more money gets made, it gets into these stable coins, and you see a ramping up going from 10 trillion to 15 to 16, right? 24, 50, 60, 70. And the key is understanding, okay, cool. Like there's a lot of new capital coming into crypto, but this gradient of being flat significantly changes going into that bull run. And so a lot of what we've seen was what GBTC buying. And as you can see, they're still the biggest holder of Bitcoin, even though they're selling hundreds of millions every single day. But outside of that, you see new money, new participants coming into these stable coins. And then so the cool and interesting thing about that is, yes, you have your bear market time where, okay, cool. People are like, I don't want to be in stable coins. Let me go ahead and get my money back, whatever the case may be. Let me get my dollars back. And then so that happens in the bear. But the cool thing is like, okay, now we see that change of tides. And I mentioned this, we got a change of tides as soon as we hit January 2023, where the minting of stable coins, the liquidity started to come back, and we have been going up ever since. If you want to look at the movement of Bitcoin especially, but then also Ethereum, what do we find? We find that the chart looks very similar where we had that big blast off in the early Q1 of 2023. So we're talking, January, February, and March. Then we wane off. We have a little bit more sideways accumulation action. And then once we get to October, boom, we take off again. And this is the point in time when a lot of the altcoins got liquidity as well. So positive development for USDT. Let's go ahead and look at USDC. So USDC, let's talk about it. So USDC here. USDC, same thing, where it had a massive influx in, and here's the key. It started to get a little bit more, because this is the US based stablecoin where a lot of market, think about it. Basically, whether they're using Tether or USDC is going to let you know, okay, like where are these investors mainly out of? So what can we see? If they're using USDC, that means primarily most of that money liquidity is coming from the United States. Tether, other countries. Now, the interesting thing about that is USDC kind of ramped up a little bit later. And so we're talking about January 2021. But once again, that's when you really start to see that really big push for altcoins. And then so same thing, you see USDC go from $4 billion to a whopping, $55 billion at its all-time high. And then that bear market was big. A lot of people took their profits back into USDC. And so, USDC goes back into dollars and the cycle returns in terms of saying, okay, well, what's going on from there? Now, the interesting thing is at this point in time, January 2023, USDT, what did USDT do? It started to go back up. So other countries started to get involved essentially of saying, okay, cool, we want crypto. But just until now, the U.S. is waking up where it's just like, okay, we're going to stop, just saying, hey, we just want to hold these dollars and stuff like that. Let's go ahead and get back in the game. And then so once again, once we got to that time period of October, the tides changed and we find that now USDC is back on the print. So once again, we're sitting right about, if you want to look at it in detail, right about $29 billion in USDC. So these are positive things. So now the question may be, how can we track these and to help us as investors? Well, I got the answer for you. So let me show you this gem of a chart here where it is basically going to give us the aggregate on a 200-day SMA. This is going to show us the stablecoin supply ratio, okay? So the time points and indications of when there's more stablecoins being printed versus when there's not so many stablecoins being printed. So in orange is the metric and in white is price for Bitcoin. Now, the interesting thing about this, we can go back as far as we want. Back here we see in 2019, what do we find? The metric is saying, okay, cool. on a 200-day basis, when we see an influx of stablecoins coming into the market, that starts to take off. But then what do you see? Price follows after. And so this is very compelling to say, okay, cool. When we have these stable coins coming into the market, okay, all right, now we're typically going to feed some positive price action. And so when we see that, okay, then that net aggregate change for stable coins dwindles down, basically saying, okay, maybe not so much capital is coming in so frequently, right? Then you see price tend to follow the same. So this thing is spot on as far as, hey, when is there risk on liquidity coming for the market or coming into the market? Okay, more stable coins are being issued, right? And then so that big run up here in 2020 going into 2021, there was a huge like impulse of stable coins on the ratio going from negative to a reading of, we're talking 2.5. So basically 5 times more stable coins got issued over this span. And we're talking all of in between September of 2020 to January of 2021. And so when that happens, best believe after January 2021, we've seen an expansive amount of just, capital going into altcoins. We're seeing stuff like Matic do 50x during that time from like January to May. Phantom doing who knows what, like Phantom did like 1,000x in this first cycle. So, but even during that time, it did like another like 25, 30x. So, all of this money coming in and rushing in. And when they slow that down, yes, price is getting extremely bullish still, but at some point it's going to mean revert and follow the action of the stablecoins, y'all. So let's talk into this cycle. So this cycle, what do we see? An influx of stablecoins. So we've seen that in January, and obviously mainly because of the USDT. Then it waned off. Price, held up decently, but then we had a second injection of liquidity from the stable coins, and that was in October, mid-October. So we see that injection right there. And what are we getting currently? We're getting another injection of stable coins as of late January, and it's just pumping, more stable coins coming in. So this is what we like. Crypto is going to eat it up, and Bitcoin's always first, y'all. And I talk about all the time that capital rotation is going to be right after. So we are in a great spot. Incredible chart because it really helps you understand how important these stable coins are going to play its role. So good thing that we know this information. And if you didn't, now you do. So what I find is through time, we're going to get an injection of liquidity. Let's see if we wane off, because typically we have some time after we have that sharp rise. We have a period of time where not so many stable coins are coming in. And there may be some divergence of price going up, just not as rapid, because we are in a bull market. Just because this goes down doesn't mean that price is going to go down. And so just know that, when you see this going straight up like that, understand that prices are going to be going up in synchronization or very soon after. So, we got a lot of stuff. And yes, sir, you already know. Yes, we gotta get it right. And we got to get the full alpha with this for sure. What up, Crypto Boogie? Appreciate you for coming through. Who else we got in chat? 2 words. Let's go. 100%. To be honest, Dan T, we're going to keep checking. We'll see. We might get that all-time high. I'm kind of getting the feeling that they're going to try to wait to push it to tomorrow. It makes for better headlines. It's like, all right, think about it. I'm thinking about this during like when the market opens, right, at 8:30 Central Standard Time or wherever you may be. It's going to be like, all right, as we open the market, Bitcoin is reaching all-time highs, pumping XYZ. So we'll see what goes on with that. Incredible stuff. Now let's kind of dive into some of this here. So I got something for you. We can also track the net capital change, so the net position change. And this is another way of looking at it, basically. So what we have is inflows and outflows. So USDC is a big player. And yes, even though we had some really nice inflows in terms of, what's going on with USDT, you really need both of those two, USDC and USDT, in conjunction to really start to move a market, and especially the altcoins, right? So same thing here. As we look at this last cycle, we see where the net position change was, it was okay. It's decent. And let's see if we can kind of look at just this period here. All right, here, let's reload this chart. All right, so it's decent, but you really start to see, once things start to come through on the net position change for stablecoins, price is really doing this thing. And then so that's a really nice development. And what you see is that red line, the slope is up and to the right. When you're in a bear market, when you see this thing start to tip over, like when it says, okay, cool, we're coming high and we're making a new lower low. All right, cool. Lower low, bear market. And then so a lot like, if I'm really to coin it, like, yes, I think we were in that nice transition phase in crypto spring in January and February, March, and all of really 2023. But really, honestly, in my personal opinion, I think the bull market really started October of 2023. And so we've been in a bull market since October. We're talking, 5 months. And as we can see, if we start to look at timelines, we're coming up on that halving. And so, typically 18 months after the halving, which we got plenty of time till then, we are trending in the right direction. And the next thing that I do want to kind of touch on and kind of show us, okay, well, hey, what are probable outcomes based upon the statistics of movement of price via halving years in previous years. So we're talking about 2012, 2016, and 2020, and this current year, 2024. We're talking about the actual halving year. What does price like to do? Down draws, uptrends, everything. How can we get a true assessment of what that really looks like? So once again, let's jump into some of the stats. And okay, so we got this here, and I may try to, let me see if I could make this make sense a little bit more. Basically, what we're looking at is we're looking at all of the monthly performance data for Bitcoin since inception. Okay. Now we're going to see quite a few things plotted. And so obviously the price performance is going to be here on the left in percentage. And let me see if I can get that in there so we can all see that. So price performance is there on the left. And as we can kind of see, we're really looking at all different type of deviations of what happens for BTC during its lineage, during its years. And, obviously we're looking at this on a monthly basis. And so one thing that you can see, if you want to just be very basic with it, yes, this shows volatility, obviously. But if you look at the chart, it goes more up and to the right than anything. One thing I do want to kind of talk about is to the upside. What tends to be those time periods where we experience tremendous upside, just net. I'm just talking about every single year, not talking about just only the halving years. I'm talking about bear market years or whatever the case may be. It's just like typically when you find yourself getting into like that April through June period, that's typically a good time. You see as this compresses down where things are a little bit more negative to neutral for, that summertime. So July, August, September. But in general, Bitcoin has the normal, and I'm talking about like long-term secular trend towards the end of the year, especially October, November, December being really, really good, despite some of the bear market years. And so that's looking at this holistically as a whole. Now, I want to just solely separate just the halving year. So what we're going to do is we're only going to keep up just these blue years. And so that's going to be 2012, 2016, 2020, and the current year of what we have now, 2024. And so if we it kind of looks a little bit like origami, I know. But one thing that we can see is understand the midline. So basically monthly price movements above this midline is positive, obviously, going anywhere from 10, 20, 30, up to 40%. I mean, just look at it. In February, we legitimately just had the best, look at that. We had the best, the second best month after 2013. But 2013 was a ridiculous cycle, man. But in modern times, this is the best that Bitcoin has ever done in a month. It's incredible, And so now let's get to the crux of, this information here. So now we want to look and say, okay, how much time does this really truly spend above the midline? And as you can see, the most of the space that you see taken up on this chart is spending much of this time in the halving years above the midline. So that's the first thing to realize. The asymmetrical return is more likely to the upside than to the downside. Now that looks completely different, for example, versus if we just look at all the bear market years. So if we were to look at 2014, 2018, 2022, all of that kind of stuff, and so we get rid of this other halving stuff, you see it's the exact opposite. More of the price data spends time below the midline, as you can see, than above. And that's easy to see. So as we kind of go back, so, we're getting context here. So certain years do matter as an investor here within the crypto space. So one thing that we can see is that obviously the end of the year, as just in general, gets really good. Like, as I kind of look at this data, there's really only 2 points where we had in a halving year down draws. And if you understand what these actually were, you'll start to say, oh, snap, well, I think this makes sense to me. So for example, this year in particular, this is March of 2020. As we all know, this is a black swan event. This is COVID, where in that month we were down 25%. Okay. Now, if we look in a little bit more relevant terms, in 2012, in February, we had a time period where we went down 20%. Well, if you go do your research in 2012, there was some economic crisis during this time. And so once again, these are black swans. These are out of the regular type scenarios. But then again, 20%. But if you look at the net aggregate as the rest of the year goes on, you're going to end up positive, right? Because you have readings of 30%, you have readings of, 27% and all that kind of stuff. So all this down draw, that dip gets eaten up by the rest of the year. So now the interesting thing is, if you want to look at an average outside of those two outliers, so if you look at the dot here, 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 so we have a lot more relevant data here now. So now we have several touch points where we can see in general, if there is a downturn in a halving year on a monthly basis, at worst, it's been 10%. So you've got to look at this as an investor and say, okay, the worst down draw that we may face during this halving year, so we're talking about the rest of 2024, is 10% on and I'm talking about, this is the stats. This is not a guarantee, but this is talking about past statistics, essentially. We're looking at the stats, right? So we can say, okay, cool, it's not going to present present performance, but we're playing the odds. And you're going to have to do that as an investor to be able to do risk management. So you're not gambling here. You're just looking at, okay, like, hey, what is typical movement for liquidity flows for a particular asset? And we have many data points. We're not just looking at 1 year. We're looking at several halving years prior to this. And so the regime is as follows, where we have several months, 30%, on average for May. Like, we want to look at April, whatever the case may be, looking at 3%, 8%, and 30%. But look at March. March tends to be the little bit more muted month in terms of relevant, price data as far as these other cycles, where you had just 1%, -1, or -4. So if we were saying, hey, just due to past data, if there is a month where Bitcoin ain't going all crazy, it'll be this month. But as of right now, we're finding out that 2024 is tending to be that little bit of an outlier. But we'll see how the month is going to close. We have a long way to go. And then but now you tend to see, okay, well, now we have divergence away, because what you really want to do is, okay, find the months where you have more white space above this black line. And then so that means just on average, you're going to find a lot of these months having nice price performance to the upside. And so, what we can see, just, all right, like I mentioned before, June, July, really good months typically for Bitcoin, especially once you get back over to October, November, and December. And just in general, like, if you want to pinpoint some of these months, we're seeing like in 2020, 30%, 43%, 54% in a span of 3 months. And that's not even cumulative. You add all that up, that's probably looking like an additional, who may be like 2 or 3x in a standpoint of, we're talking 3 months. And so, that's pretty impressive. Once again, for 2016 as well, yes, you may have these little bit of down draws. We're talking, okay, 15% there, 3%, 7%, 5%, but steady growth, 7%, 16%, 25%, so forth and so on. 2012, one heck of a year as well. And so we really want to look at, say, hey, what's the base case that we can not necessarily expect, but plan and hedge for? and how to allocate knowing this information. And then so I would be a little bit more long than anything, especially in the first quarter of this year, because typically at that point you see the train starts to leave the station, and there's only few relevant subsequent times when you can potentially find a decent drawback to be able to get a sizable position that would make sense for your portfolio in a halving year. And as we already know, kind of, crypto autumn. So, these time points of when things get really, really nice. So 2017, 2013, 2021. Let's take a look at that. So we'll take the halving years off. And as you can see, it's flat out just ridiculous. Like, 2013, a crazy outlier. And so if we just take that off, but as you can see, now here was China ban on crypto mining and all that kind of stuff. But you see these spikes, right? You see these mountaintops where you have these significant price uptrends. And so you're seeing 60% months, you're seeing 70% months, 40% months, 28% months, and of the like. And so, and this is like the extra icing on the cake once you get into crypto autumn. And, this is some really impressive stuff here. So, I say all that to say these stablecoins are very important. We need to look at the net capital change, see how they continue to find their way into the DeFi ecosystems. And that's ecosystems like Phantom. That's ecosystems like, potentially some of these newer ecosystems like Say or Celestia, all that good stuff. So, relevant information definitely needs to keep on the up and up with all this, and not just look at price, because we need to know what drives price. And so this is some of the stuff that does. So, yes, sir. What else we got in the chat? What are y'all thoughts? I know this is a lot of data, a lot of information, but we definitely need to keep tabs on it. Definitely hit the like button if you guys have not. We're going to keep going. So let's trek over back to Bitcoin. Let's see. I mean, still, this SHIB candle is still crazy to me. But Bitcoin, are we going to get it? It's kind of solid now. I've been kind of watching it over like the past 4 or 5 hours. And on the daily, it's kind of just been chilling in this 6,800 range, like low 6,800 range. I think tomorrow may be the day. But here's the arbitrage, right? So when Bitcoin is going up, while the stablecoins, or I'm sorry, not stablecoins, but while the alts are not, right? Opportunity, right? We've seen Phantom have a nice injection of liquidity. So, I think Phantom is still a decent buy before $1 for sure. But once you get to $1, then those numbers don't necessarily multiply as easily or compound like when you're getting it at 30 cents or 60 cents even. So let's put this on the weekly. And we had plenty of times to buy Phantom. Let's put on the Hatter. So, I mean, just, using our Vulture crypto metrics here, plenty of opportunities to buy Phantom at 22 cents. Obviously around like 18 cents, 20 cents, 24 cents, and once again 20 to 21 cents before things took off. And then really, this is nice because we're seeing something like Phantom, the first EVM to become into existence, have a very nice candle, very reminiscent of its larger moves back in its first cycle. And then so, you really didn't see these types of candles until, you've seen Phantom really start to establish itself and start to really get that liquidity push from, all the stimulus from COVID. So it's very nice to see. Now we want to see continuation as always. What else do we have? Let's see what else we got. Let's talk about Metis. It's been a while now. Metis, a lot of people don't really talk about Metis, but I talk about Metis a lot because why? It sneakily did like an 8x from October. Like nobody, not nobody, us in the Vulture crypto, like we were really talking about a lot, really being able to DCA on Metis quite a bit, especially towards the back half of 2023. But people don't understand, once it broke out past this resistance of $45, and it's nice to see it's in this accumulation range for its next big push. But Metis is a coin that came out at the top of last cycle, went through a bear market, but like I said, it sneakily, very sneakily did, look at that, a 10x. And like I said, this is a layer 1 ecosystem, right? They're basically going to be attached to Ethereum and attached to the liquidity that comes from Ethereum. And so, this is something to make note of, and it's very easily accessible to buy on a lot of exchanges. So Metis, they're trying to be a scaling solution, and just as all the many other scaling solutions for Ethereum. But once again, you got to understand who's involved. So people that know Vitalik Buterin very well, aka his mother, is involved in this ecosystem. So things to think of, very well expanded above the 100-day moving average and is trending to the upside. Now here's, like I said, here's the opportunity. Learn to spot opportunity when you see it, right? So, as this is kind of stalling out, right? Yeah, this is like finally getting back to where we see the RSI, especially like on a 3-day, coming back down to that fair value range, but price is holding up. So believe it or not, that's actually bullish divergence. And so, this may be an opportunity for those that say, hey, I don't really know about Metis before it looks to do its next lunge, because the thing about this is like, look, as this stuff gets into price discovery, the upside, it gets freaky, y'all. Like, the upside is one of those things to where you say, okay, cool. Like, you don't understand it until you've actually gone through it in a cycle. So those of us that have been there, especially during that 2020 ramp up, like I've experienced, and I'm like, okay, I'm geared 10 times better even this time. I did well last time, but I'm gonna kill it this time. And so, like, if you haven't experienced that yet, like, you really don't get it, like, on how pivotal it is to get your capital inside these markets. Because once we have these lunges, they don't come back. Like, after something goes up like 10x in a span of 2 months, it doesn't go back down 10x in the next 2 months. It may pull back 30%, but that's not that much of a pullback compared to 10x. So the thing is this, as we kind of ascend through these levels, you're gonna see, okay, the opportunity for a nice, easy, like the asymmetrical return, like we talked about for Bitcoin. Even if Bitcoin is not gonna have that much downside of having year, then something that's gonna outpace Bitcoin, especially in the altcoin market. And even the narratives of people talking about, like, okay, let's actually go ahead and start to rotate, into the alts now that Bitcoin is getting to all-time highs. Like, these are things that people say and that they're gonna do, right? The fulfilling prophecy of what people do. And so, going from a price of $100 or right under, do not be surprised if you see this next move going up to $274. And so, that's just the way the way it's gonna go. And as you can see, the Hatter gave us plenty of good buy signals, $19 all the way down to about like $10. And so, right, that's where you, like, the people that take advantage of the bear market, these are the people that end up getting the 50 and 100x's simply just because they're positioned correctly in the liquidity, in the liquidity flow. So, a lot of good stuff. Let's look at some detailed information. Let's see if we can get some information. See if we can get this up. Let's go back to Ethereum really quick. Yeah, no, Ethereum wants to shine. I want to take a look at a couple things. So let's go over to the invite only scripts. We'll look at the fear and greed. And I also want to look at the 52-week high and low. All right. Yep, I knew it. So yeah, so we just got it. All right, cool. All right. So we'll take RSI off for now. That one's pretty basic. We all understand that one by now, I'm sure. Let's talk about levels of fear and greed. Now, I want to look at this on, let's look at this on a couple of things. We can look at this on the daily and then the weekly. So let's go daily first. So the appetite for Ethereum is here. If we, and we'll turn off the having profit window for a second. For those that are like, hey, how do I take profits? Well, hey, I got the solution for that too, if you're looking for it. And if you want access to this stuff, you already know what to do. Go ahead, go to voltcrypto.com, hop in a group, and you'll get access to all this stuff. But so we've got greed. We did a huge round trip from 3. So basically nobody was greedy on Ethereum in October to, we're sitting at a reading of 99% on the daily for Ethereum. So yes, people want it, and the price is reflecting. Yeah, Ethereum ETF, it may be that thing that's really going to start to push Ethereum above and beyond. We'll find out here in a few months. So people are hungry and thirsty for the asset, And, we had a relevant time of saying, okay, cool. If you did want to get that last DCA in over a 60-day basis, that would have needed to happen at the beginning of February. And so now if we kind of crunch this back down, I'm always looking for a couple things to coincide and show me the story of an asset. So we see, okay, there's extreme greed. And at the same exact time over a yearly basis, we finally see Ethereum starting to create new highs. And this is key. This is in very indicative points of when things start to really break out in a bull run. How do we know that? Well, we can really start to get the gist when we look at the data, and we can come all the way back down. So let's collapse that down just a little bit. We can get a sense of that all the way from, from these points here. So over a relative time, when we see Ethereum really, really rocking and rolling, where we're finding that we see the fear and greed at, instrumental levels of just, greed. We're talking about 95. And at the same time, you're also seeing Ethereum putting in new highs on a yearly basis. So that's a good sign, through and through. Here, let's take off the Heikingashi trend reversal. All right. Now, here's the key. The reason why I love tracking things on a 52-week basis is it's really good at letting you know risk on versus risk off. And so the appetite of a market. And so one thing that we find is, yes, we can see risk on periods, and we can find these periods of time where it's like, okay, where's this asset and where are these people that are currently buying versus people who bought a year ago. So, what this also tells me is that these people are paying a premium for this asset versus people that bought 52 weeks prior to them. Huge premium. And so ideally, you do not necessarily want to be the person in that capital flow buying the premium. So, for me, right, you start to see like Ethereum start to get at that premium once it starts to cross over like $2,300. And now the other reason of why you want to look at things on a yearly basis is because you can see after a bull run and you start to dwindle down to a bear, this really helps you understand, okay, through the duration, what helps you get the price lows. And then so you have this capitulation in Luna letting you know, okay, here's the first instance in red saying, all right, cool. Like this is like that first opportunity of really sniping something at a good relative value versus the people who are positioned in this asset a year before you. So for example, like, the people that are buying at $4,700 are at a significant loss, and they realize it at that point. And then so that's how you get this low in the first place. But, and so we're talking about this here, but then also how you're able to see that this literally like strike the bottom, like this literally caught the bottom, and you start to see during this basin of June of 2022 of, where you were able to get that, $800 to $900 Ethereum. And guess what? We will never see that price again. Just like how we won't see this price of essentially 76 or even $100 Ethereum ever again. So, this is ways to look at the market and say, all right, now people are going to be paying this premium for Ethereum. And my guess is they're going to be doing that for quite some time, Now, outside of that, I guess I'll put it up. We will look at the halving profit window. And typically I would reserve this only for the folks in the Vault of Crypto, but we'll kind of shine it up. You want to know how to take profits? I'll give you a little bit of alpha here. So when it comes down to looking at an asset, Ethereum, any altcoin, whatever the case is, yes, looking at price is one way, but understanding time is another. And so typically, and we're going to have on these yellow vertical lines, that's going to match or it's going to mark the halving. And typically, when you want to consider taking some profits, is going to be anywhere between 40 and 80 weeks after the halving. I've kind of gone on here a couple of times and say, hey, if you, put that point on the halving and say, all right, if I just wait 40 weeks at worst in the first cycle for Ethereum, you had a 5x from that point all the way up to, we're talking over 100x. So we're talking 117x. Best case scenario. So anything in between there. And for the average person, like that's amazing. And then same thing from this last halving, you go to 40 weeks, anywhere in between that 8x to, we're talking 20x. And that's just for Ethereum. And I think the sweet spot really is like that 50-week time. And then so free gem. If you're saying, hey, I want to make sure I make money this cycle, buy some Ethereum, do it before the halving, wait 40, and ideally I would say 50 to 80 weeks, take profit anywhere in between there, and you're going to make money. Thank you. Yes, thank you, thank you, thank you, thank you, thank you. I will take that because simply it's just easy. It's probably one of the easiest trades that you can do because, like we talked about, there's relatively low risk in the halving year amongst compared to other years. And so keep that in mind, y'all. And so a lot of good stuff. I'm really excited to talk about the things that matter in this market. I know a lot of people do stuff that is going to continue to get everyone excited. Yes, I'm excited too. But I want to be data driven. I want to continue to talk about the things that are moving these markets and how to spot not just what coins to buy, but how to spot the change of tides when they do happen. Because I'm telling you, when everybody is on 100% euphoria and everybody's made money, I'm talking about even the people that have been holding for all of like a week, they've already got their double. It's going to be very hard to try to have these conversations and try to basically say, hey, we need to talk about strategy of how to solidify all of our hard work in terms of taking profit. People ain't going to want to hear it. Yes, I'm going to be that guy saying, hey, it's probably prudent to think about this stuff here at this point, and here's why. But everybody else is going to be like, oh, this coin is still doing this and that coin is still doing that. Okay, cool. Like an investor knows how to sell into a pump, not sell the top like you're a trader selling a top, trying to buy a bottom. You need to sell into a top. You need to DCA into a bottom. This is the stuff that smart people do. You make the choice. You want to be smart or you want to be like everybody else that messed up their shot. A lot of people that had a lot of, unrealized profits in 2021, but they thought it was going to go to 100K, then 200K. But everything was telling us that it wasn't going to do that, So be sober, be vigilant, be understanding of how these cycles go, and play your part. And it's up to you because it's for you and your family only, really. Like no one else is going to be watching your pockets for you and say, okay, like I care about your family and you so much that I'm going to stop shilling this coin. Like the scams are going to be 10 times more. The moon boys are going to be even more moonier. Like they're already pretty moon boy right now, but it's like, yes. And we're going to have, like, I'm a moon boy as well because I know these prices are going up. I don't think they are. I know they are. And so, but every dog has its day. Every season has its end. And we've just got to be paying attention close enough to understand around what basin or time frame would that may be. And it's going to be a window. It's going to be a window of, who knows, 3 months, 6 months, 8 months, but somewhere in there is a way to kind of handle that. So a lot of good information, y'all. I appreciate you guys for coming through. I know everyone is definitely feeling good. Like Ethereum really, like as we even watch Ethereum's trying to push to $3,700. It legitimately was below $2,500 all of like 2 months ago. It's crazy. But as we already know, this stuff don't wait for nobody. And so either you get with it or get lost. That's just the way the cookie crumbles. I think the last thing that I'll kind of show, let me show you this. Let me show you guys the wealth transfer in real terms as we speak. So let's actually do this really quick. Let me pull up this here. We're going to go back to Glassnode. And let's go to, let's see here. I want to look at some supply stuff or yes, hodler. Yeah, here we go. Okay. So I think the easier way to look at this may be here. Okay. And then we'll look at the HODL waves. So this chart is showing us the total supply held by the long-term holders. Okay. So understand the game. It's key. The long-term holders are going to hold for certain time periods until they reach a certain amount of profit, typically that 350% range. And so, I mean, you can take a look at any cycle, but let's kind of just look at this Like we'll look at this bear market. So as you can see, as price goes down in white, the long-term holders, they start to accumulate. They're like, oh, let's go ahead and grab it. They keep accumulating all the way through the bottom basin. They even keep accumulating slowly, and then the bull starts. And then they slowly sell just a little bit. But then they may potentially decide to accumulate a little bit more. But then once you see this tips over, and then they start to sell off, like I'm talking about in droves. So like in this case in point, they had over 50% of the supply, just about 11 million Bitcoin. They slowly start to sell that into the short-term holders. And as you can see, this is a relevant change. This is not like posting up and down. Now, this is like flushing to the downside. And so when you really start to see this, understand you're in the bull market, okay? Because vice versa, we're going to see the exact opposite of this, of where the short-term holder chart is going up. Basically, this is the wealth transfer where they are positioned to where they bought these coins at a much lower price point of 200, 300, 400, 500, 600 bucks. And then they slowly start to sell into the pump. And as price goes up to 2,000, 3,000, 4,000, all the way up to 20, then you see them basically, really not have too much of that supply left. Like they essentially sell basically, in during this duration, like 30% of what they're holding off to the short-term holders. And that's something to keep note of, because it happens every cycle, just like how it did here in this next time period here, is where, okay, they accumulate, even in, that beginning phase of the bull. But then here's the key: understanding price and understanding what's going on. Once we start to approach the previous all-time highs again, then you start to see this dip down, and it don't go back up. They just distribute to the short-term holders. So where do we find ourselves now? They accumulated, and they held pretty dang long now without stopping that accumulation. And you slowly start to see, and as of, we're talking of January 2024, this is finally, after all this time, all these years, they're finally starting to sell off to the short-term holders. And as you can see, the demand is here simply because these ETFs are really taking a lot of this Bitcoin off of the long-term holders' hands. And it doesn't matter who the short-term holder is, it's going to be bought by somebody. And we can look at the vice versa here. So short-term holder supply, same thing. What do you see? As long-term holders sell, the short-term holder supply starts to ratchet up. And as you can see in orange, they start to buy up all this supply. And the reason why they can start to buy it up, because simply after the halving, it makes it a lot easier to, buy the new supply that's on the market, just simply because there's just not as much. Of course, there's always going to be certain long-term holders that just don't sell. But there is a price for everybody. And then so you can see they start to sell into the pump. Short-term holders take it away and price rockets higher. And what do we know? Short-term holders, simply, they don't want nothing to do with the market for years at a time. Years at a time. But now, what do we see? We see that flush, especially since January, and we have relevant movement to the upside. So we'll continue to see how long this will go, how strong this move really is. And we see that wealth transfer going from long-term holders to short-term holders. And the easiest way to really see it is on the HODL waves. Now, this is the realized cap. So realize basically saying, okay, like, hey, what is actually on chain happening with these coins on a cost basis standpoint, when they're actually being bought and sold. For a long time, it took me, I'm not going to say a long time, maybe about like a good 6 months of studying this, truthfully, to really understand the power in understanding this. And I'll try to make it brief, but get to a relevant point that makes sense to you. So wealth transfer is the name of the game for everything. Somebody's got dollars. Somebody has the asset. Somebody sells the asset for the dollars at some point. Somebody buys the asset at a higher price point for those dollars, so forth and so on. More money gets created. That means more money that can come into the system, XYZ. More money that can come into the system, that means price is going to go higher. Okay? Simple. Now, let's talk about this wealth transfer. Now, this is going to grab each cohort, everybody in between, like people that have been holding Bitcoin for 10 plus years, 7 to 10 years, 5 to 7, 3 to 5, all the way down to, I'm talking about just now freshly holding Bitcoin as of the last day, 24 hours. And so y'all can see that. Let's kind of look at them a little bit one by one. If you look at the chart clearly, and I'm gonna keep my mouse there because if I take it off, it's gonna show everything else. You can see during the bullish phases in the price in white, if you just track it vertical, those time points of where, okay, how do we know retail is really back? We see that this 24-hour holders for Bitcoin is on a nice slope up, but you really see these big old spikes to the upside, basically saying, all right, they're really interested in this market. So those outliers. And y'all can see that we haven't really had that, that really big spike quite yet. We had the elevation coming up, but we don't have that big spike quite yet. Now, the biggest thing is to understand this. Same thing of what we're looking at is we can just look at it in terms of cohort. The long-term holders are, and really you're kind of looking at green versus red and all the other tones. Green are the people that have been holding at least a year. So in between 1 year, 1 to 2 years, 1 to 5 years, all that kind of stuff. 5 years plus, all that good stuff. Now, one thing that we can see, especially when we get into the bull, yes, they're going to hold a lot of the supply. Simply why? Because you see all that green really kind of dipping down low and saying, okay, cool, what percentage do they hold? So like, you see that a lot of the supply gets redistributed and rebought to, and really that cohort of in between a year and 2 years. So people that have basically held over and said, okay, cool, I'm going to hold from this recent high and I'm going to accumulate even more, right? And so at 45%, they're holding just under half of the supply. And as you see, as the bull market goes, you see these green spaces, for people that have held Bitcoin for 3+ years and 2+ years and all that kind of stuff, get smaller, basically saying, okay, well, they're going to distribute their supply to the short-term holders. And what do you see? Now you start to see these batches of red. So these are people that have held Bitcoin from a week to just 1 month, or 1 month to 3 months, or just 6 months. Like, these people really start to get active. And so it's for short durations of time, but you really start to see, okay, all these gradients of red really start to pulse to the upside and say, okay, cool. Now they're really soaking up all these coins from the long-term holders. And this is when you find your tops, right? So we can see this wealth transfer every single time where, at its best, we really start to see, especially like that cohort in between, we're talking 1 to 3 months. They're basically holding just about like anywhere in between, 20% of the supply. And even at like this point in time, if you look at the chart, people that have been holding in between 1 week and 1 month, 40% of the supply. In between 1 day and 1 week, 20% of the supply. At that point in time, and we're looking at 2017, like no long holder was really holding any supply. Like they're all less than 1% or they're close by. So with that being said, that is the wealth transfer, and that gives you the top is when all the short-term holders hold the supply and they're in profit. But all the long-term holders are out. They're like, we already done sold all the stuff off to you guys. And guess what? When all the short-term holders are in, there is no more short-term holders after that. It's it. Prices got to go down before you start to see that green start to kind of pop back up on the chart, and the long-term holders start to buy again. And so even like this last cycle here, like that real true top was the first, one in April and May, is, as you can see, during this time, long-term holders in between 3 and 5 years only hold just about 4.5%. In between 2 and 3 years, only about 3%. In between a year and 2 years, just under 5%. But you really start to see those short-term holders, I'm talking the same thing, in between 1 month and 3 months, 30% of the supply. In between 1 week and 1 month, 20% of the supply. So just about 50% of the supply are in the hands of people that have been in crypto just about 3 months or less. That's how you know, all right, things are really, really starting to get super overheated. So now the question is, where are we at today? And guess what? We are just getting started. The long-term holders still hold a good amount of supply, but things are starting to get heated up. So as we can kind of see, what are we looking for? We're looking for, the 1 week to 1 month holders to hold once again, 20% of the supply. And as right now, they're at 8%, as of today. And so we're on the cusp of something major. And as you can see, each cohort is really, really starting to get more active. And the key thing is, right, we've already started to see these long-term holders, especially in between. And if we want to look at it very closely, we're looking at the long-term holders in between 2 and 3 years. It looks to be, as you can see at the corner of this chart, really already start to sell off. And generally they are the first ones. And so that's letting us know, okay, right? This next 12 to 18 months, it's going to be very exciting. It already is starting. And so, but this just confirms it. And this is just stats. It's not my opinion. This is just how the market works. So I hope that's relevant information for you guys. I'm really excited to continue to watch the developments and pay attention, right? Because I'm watching my bags. And so hoping you guys are watching yours. And don't take time for granted, you guys. Like, I remember I had a coach tell me a long time ago, okay, cool, you may be entering into something, or you might be green or fresh with something. So that means, okay, cool, you plan on doing it for some time. You got time, right? You got some years to kind of really get your footing. But he also told me you may have time, but you don't got no time to waste. So make every day impactful. Make every month at work impactful, so you can get money into this market. And definitely, try to change your financial life by playing the right side of this thing and getting out of something that is only just going to continue to become worth less. And that's those dollars, those euros, those Aussie dollars, those wherever you're at. And so I appreciate you guys for coming through. It's been a beautiful stream. And as we see, let's double check one more time. What do we got? Do we have Bitcoin making a new high quite yet? Nah. It's still sitting right about 68,000 and some change. So we'll maybe come back and do a surprise stream tomorrow if we do have a new high. But things are getting excited. So the altcoins have not in tandem taken off yet. So there's still a little bit of a chance. But once again, like I said, you got time, but you ain't got no time to waste. So until further ado, keep doing what you got to do. And I'll catch you guys on the next one. All right. Peace.